Peter Schiff, ahead of the Fed meeting, I want to talk about gold prices. Peter, always great to have you on the program. I'm going to start out with an easy question. What do you think is going to happen with the Fed tomorrow?
Well, you know, the Fed is probably going to continue the pretense that it can end the QE program, which it can't. You know, it did QE2 because QE1 didn't work, and it did QE3 because QE2 didn't work. And, you know, it can't end QE3 either. You know, people think that the Fed can end this program because they believe that it worked. Well, it didn't work. In fact, the bubble economy that the Fed inflated is more dependent on quantitative easing now than ever before.
Okay, and you've come on the show before. You have called for QE4 or some other stage of this, even if we do get an end to QE3 tomorrow. What do you think that's going to look like? Could the Fed just keep interest rates low and keep the market propped up?
Well, it can only keep interest rates low for as long as people believe that the process is temporary. You see, what's keeping a bid in the dollar is the false belief that the Fed can actually end QE and raise interest rates, which it cannot do unless it's willing to let the economy go back into recession, which, of course, we need a recession because the economy needs to heal from all the QE, because the QE has actually weakened the structure of the economy. Every problem the Fed tried to solve, they've made worse. So the economy is in much worse shape today than it was before the Fed began with these programs. But in order to let the market, you know, unwind the imbalances, we're going to have a severe recession. We're going to have another financial crisis, unfortunately, worse than the one we had in 2008. I don't think the Fed has the stomach for that, which is why I think they're queuing up QE4.
All right, well, I don't think a lot of people have the stomach for it, but I do want to transition to gold prices specifically and really get right down to it with you. You know, you were on the show just over 2 years ago today. Hard to believe that it's been that long ago. And this is what you had to say about gold. Then I want to get your reaction.
One day we're going to look back at 1700 with nostalgia. People are going to be shocked at how inexpensive gold was when it could be snapped up for such a bargain price. And it's not going to take too long, just in a few years. I mean, we're talking gold 5,000. That's not the ceiling. That might end up being the low end of the range that we're going to be into.
Go back to your price target on gold. What kind of time horizon are we looking at here?
Well, I think you're going to see a big move sometime in the next couple of years, because I think we're going to have a real fiscal cliff that we're going to go over.
Okay, Peter, we're lower now than we were then. 5,000 hasn't panned out. It's a couple of years later. If people bought gold on your recommendation, what would you tell them today?
We would keep buying. I mean, 1,700 I still think is going to look cheap compared to where the market is going to go. Obviously, it's going to take a little bit longer than I might have believed at that time because so many people are still fooled, right? They still believe that what the Fed did worked. When they realize what a disaster it was, that the Fed is in a monetary roach motel, that an economy that lives by QE will die by QE, when it's QE infinity, when its rates are at zero forever, the price of gold is going to rise very rapidly. And I think the people who didn't buy it at 1,700, who might think they're smart now because it's at 1,250 and they don't own it, I think it'll go through 2,000 very quickly, and people will be very upset that they didn't buy gold at 1,700.
Well, let me ask you this, because you're very quick to criticize the Fed, but let's talk about what we have seen positive coming out of this period. Obviously, a lot of people have said this is a spiked punch bowl with the bond buying programs, but at the same time, we do have an earnings season right now that's panning out pretty well. Corporate profits are where they need to be. Earnings are growing. And you also have an economy that's growing as well. I mentioned it before with McNeil. We've got oil prices are lower. Consumers maybe going to take some of that extra money and put it back into the economy. Maybe, Peter, things aren't as bad as you think they are.
They're probably actually worse. You know, you have to realize that whatever progress the Fed thinks has been achieved as a result of its monetary programs, all that progress is going to be reversed when the programs end. In fact, as they've tapered QE, you've already seen a lot of negative economic data come out. Most of the data that's come out over the past few months has surprised people to the downside. People are expecting better numbers than we are getting, and that is going to continue. And if the Fed actually ends QE tomorrow, then the data is going to continue to get worse. And of course, the stock market is going to come under more pressure. When you take away quantitative easing, you bring back a bear market in stocks, you create another bear market in real estate.
Right,
and we've already
Peter,
saw, just a week or two ago, Bullard came out as the stock market was going down, and what he came out and suggested, well, maybe we should pause the taper.
Right.
Because the Fed blinked. The Fed knows if they take away the supports, the market will collapse.
It's interesting, though, Peter, because everybody knows potentially this end to QE is coming tomorrow, yet the market continues to rise today. And you even had the traders on just a couple of moments ago saying the little blip that we saw to the downside was just a temporary correction. So what is it that the market doesn't know today that all of a sudden it's going to know tomorrow when QE ends?
Well, just because it ends doesn't mean it ends for good. I mean, there was a pause between QE and QE2, and there was a pause between QE2 and QE3. In fact, they even threw in Operation Twist. So even if the Fed brings QE to an end tomorrow, doesn't mean they're not going to, resurrect it in a month or two.
It doesn't, and then we'll get a pause, and then if we get something else, the market will continue to go higher from there. Look, I'm not on the side of the Fed here. I want to be very clear about that. I'm just looking at sort of the argument that you're making and saying really what ends up happening to stocks. By all accounts, then they go higher.
Well, in nominal terms, yes, they are going to continue to move higher. I've always said that nominally, because of all the inflation that the Fed is creating, stock prices are going to trend higher. But in real terms, when people perceive the box the Fed is in, and again, that they didn't grow a real economy, they inflated a bubble that needs ever-increasing supplies of monetary air to keep growing, then when you see a big move up in the gold price, a big drop in the value of the dollar, I think that real U.S. stock prices, adjusted for real inflation or measured in gold, you're going to see a big decline in the price of stocks relative to gold, even if stock prices continue to trend upward in terms of rapidly depreciating U.S. dollars.
All right, Scott Nations wants in here. Scott.
I do indeed. Peter, I have a question because last time you and I were on together talking about gold, you said gold had some demand because dentists like to use it in dental work. That was May 22nd, and since then, gold is down 5%. 2 years ago, you said it was going to go to 5,000. Well, it's at about 1,200 right now. My question is, Peter, people watch us because they want to figure out how to invest. They want a little advice. When are you ever wrong? When are you ever wrong, and how do you ever learn if you're never wrong?
Well, first of all, right, I've been consistently telling people to buy gold since it was under $300
consistently
an ounce.
Wrong. And
so people who have been following my advice for the past 13 years and have bought gold are actually doing better than people who have just bought stocks. But I've also advised people to buy stocks. I haven't told people to only buy gold. I've told people to have gold as part of a portfolio. So you have to look at my overall investment strategy. You didn't say that the S&P was going to be at 5,000. You said gold was going to be at 5,000. I think it's going to be at 5,000. You said it 2 years ago. You said it'd be there now, and you're wrong. Are you ever wrong? And how do you learn as an investor if you never admit that you're wrong? Look, I'm wrong a lot less often than almost everybody else that comes out on CNBC. I mean, all you do is parade people who are wrong. I mean, think of all the bulls who you brought out here on the stock market when the NASDAQ was at 5,000. Every time they come on, because the NASDAQ is still below 5,000. Do you tell them how wrong they were? Hey, you told people to buy stocks in 2000, and look, the NASDAQ is still lower. You know, I'm the only one that you talk about, and you guys put these time horizons on. I never came on the show and said, hey, I guarantee in 2 years gold's going to be 5,000. You always want to press me. When is it going to be there? When is it going to be there? I don't know for sure. No, but you're asking me when. I don't know exactly when it's going to happen.
Then why did you say 2 years?
How long was I coming on CNBC talking about the housing bubble and you guys were laughing at me when I was forecasting the financial crisis? Go to YouTube. Why don't you look at Peter Schiff in 2005 and 2006 and 2007? I'm the only person who was on CNBC and got it right. Nobody else but me. Just go look at the tape.
So you're never wrong. Peter, I think that this is actually
I didn't say that.
Dangerous.
You said that.
This is
but I will tell you this. I am wrong less often than every other guest that comes on this program, bar none. Yet you don't give other people a hassle for how often they're wrong. I generally get things right. And all you're doing is saying, hey, wait a minute. You said gold would be here at a certain date, and it's not there. You pressed me for a date, and I said, I don't know, a couple of years, 2 or 3 years. And so what? It hasn't happened yet. But if you look at the broad picture, I'm the only one that knew QE wouldn't work. In fact, I predicted the Fed would do QE before it even did QE1.
Gentlemen,
so, while everybody thought it was going to work, I knew that it wouldn't, and the structure of the economy has been weakened dramatically by the Fed. The problem is you guys don't know that. You were so fooled by the phony economy before the financial crisis. You're just as fooled now. You had no idea what was wrong with the economy then. You don't know what's wrong with it now. That's why you think the Fed's cure worked. In fact, the Fed's cure has made the economy sicker.
Peter,
and when you get blindsided by this next crisis, hopefully you'll apologize to me, because you didn't do it last time.
phony economy right now or not, this is a market momentum shift that we're seeing, a dynamic to the upside. If you're a successful trader, you're definitely going to be able to ride this wave. And you're right about time horizons. They're very difficult to call. But at the same time, and as I told Bill Fleckenstein, and I stand by this, if you sat out while this market moved higher, you lost money. Inflation eroded your cash that was sitting in the bank. So it's really difficult to sit there and say it's a spiked punch bowl and that it's this, that, and the other thing. When the market is moving higher, people are making money.
Well, a lot of people are making money on paper, and they're going to lose it all back. But again, we're not sitting in cash. We're invested in things. We're invested in stocks. We're invested in precious metals. So I understand that cash is not going to work out. Bonds are not going to work out. People are going to lose a lot of purchasing power. You know, a lot of the jobs, in fact, almost all the jobs that have been created this year are being created for the elderly. I mean, people in their 60s and 70s have got jobs even though they don't want them because they're losing so much purchasing power because of all the inflation the Fed is creating to prop up the asset bubbles and to keep monetizing government debt. So yeah, I mean, if you're holding cash, you're holding nothing. You know, you have to hold assets. But I think you have to recognize that if you're going to be in the stock markets, there are much better markets in the world to be invested in than in the U.S. because we have some real serious structural economic problems that we have yet to deal with because of the Fed. And because the Fed has delayed the day of reckoning so long, it's going to be that much more painful to deal with these problems.
Okay, and if you're talking about holding assets like gold, perhaps some people are, and they're waiting for it to move to 5,000, as you are suggesting it will. I personally will not be holding my breath until then. But Peter, thank you so much for coming on. We will have you on again soon to check in. Meantime, I want to know how to trade it, at least in the short term. 5,000 is not happening. Anthony Grisanti, what do you think?
You know, I don't think it's happening either, Jackie. And even with the QE, even if they start another QE program, Peter saw the results over the last QE program. Gold actually traded a lot lower. It didn't go any higher when they started, you know, spiking the punch bowl. I'm going to use every kind of metaphor that he uses. But when they started doing that, gold actually headed lower at that point. So barring some sort of economic collapse that we saw in 07, which we're not going to see now, we're not going to see it. Sure, I could say the Jets are going to win another game this year, and I could be right about that. They have a 1 win right now, but they have 8 more games to play, so I could be right about that, and then I'll look like a genius. But, you know, barring any economic collapse, gold is not going to get bid to 1,700, 1,800, 2,000. It's just not going to happen.
Okay, so what are the levels that you're trading gold right now?
It was actually Scott's trade, I believe, that he wanted to do.
Oh, pardon me, Scott, your trade.
Well, I'm trading gold, and you might have a tough time believing this because I disagree with Peter. I'm actually selling it. And why am I selling it? Well, because just as when stocks sold off, that was a buying opportunity. When stocks sold off, gold caught a bid, and that's a selling opportunity. So I want to sell gold. Specifically, I want to sell Dees gold at 12.31 even. It's gotten mushy right there, so we get some downside from there. The target is 12.05 even. We're not getting crazy here. We're not being overly greedy.
I'm with you on this, brother.
And our stop is fairly 12.40 even.
Okay, all right, fair enough. Gentlemen, thank you so much. And my thanks to our guests today, McNeil Curry, and also Peter Schiff. It's always a lively conversation when he is on the program.